Okay, yeah, welcome back. Welcome back on this one. So now let's quickly explain what happened yesterday on USD CHF. Okay, now this is yesterday's candle. This was the candle. This candle here. This is yesterday candle. Now, what did this candle did? It came and tapped from this open close. All right, we are still on how to combine key levels and CRT. All right, so I'll be using key levels on this video. We'll be explaining more on key levels. All right. So, but if we encounter a CRT, we can also explain it. Okay. Now, you see that price tap to this open close. If you don't know what open close is, visit my last, like, yeah, my previous video. Yes, visit my previous video I made on explaining all these key levels, the A shape, V shape, open close, and the brothers. Okay. Now this is an open close here. The- let me see explain what open close is. An open close is the gap between two consecutive candles. You can see there's a gap between these two candles. Now this is the open close. All right. Now what the price do here? It came and tapped that open close. Now let's quickly go to the 4 hours. Let's go to the 4 hours and see for ourselves. Okay. You cannot delete the open close. We have identified it. All right. So what you will do, how you trade, what you trade is simple. Price pulls back to a key level, pulls back to a key level, then identify a break of structure, then wait for price, then also identify a key level, a possible key level price will pull back to. Then wait for price to pull back to that key level after the break of structure. Instant have been formed. Wait for price to come out and mitigate the key level inside the break of structure. Then we shoot. Okay, if it's a buy, we long. If it's a sell, we short. That's it. Okay. Now this is a key level. This is when price tap to that key level here. Okay. Yeah, this is it. This is it. Yeah. This is it. Yeah. Now let me confirm. Let me go to okay, I can still confirm here because this fault and that candle is fifth. All right, yes, yes, yes. This was when it tapped to that key level. All right. There's a way this candle closes by 20 by 11 that kind of stuff. So this is when price put back to that key level. Now you can see that price has put back to this key level. So what we do is what we go to what we go to the next time frame. So we saw the pullback on the 4 hours. Then we'll go to 1 hour. Go to 1 hour. Then we identify what a break of structure on the 1 hour. Okay, and also identify a break of structure here on the 1 hour. But first, let's look at what price has been doing over time. What happened? Just like what I do, I like to trace price from what it has been playing out. Okay, what it has been doing. All right. Now you can see that price is kind of respecting the key level here. The key level that is holding price there. Okay, the key level that price is respecting here on the 2 hours. Let me go to the 1 hour. It is the key level, and price has been going up. And I can see that price pulled back to a key level here. This open close. All right, pulled back on the 1 hour. Pulled back on the 1 hour. So I can easily go to 30 minutes or 15 minutes to identify my break of structure. To identify my break of structure. All right. So this is more like our first entry, but that's not it. You're not going to consider taking this. We want to take a confirmation entry. Okay. So why did I say that this is our first entry? You can see that from here. You see that price pull back to this key level. Price pull back to this key level and did what? And broke structure. So there's a break of structure here. There's a break of structure here. Okay. There's a break of structure. BOS. That's a break of structure. All right. So that's a break. So then after the break of structure, it put back to this open close on the 1 hour. All right. So this is supposed to be our first entry. All right. Then our stop loss. Maybe we do like 30 pips. You put it at this low, this candle low, like this candle low. That is the candle that are using the key level candle low. All right. So then this is supposed to be our first entry, but we didn't catch it yet. Okay, and this was when price put back on the daily time frame to that open close. All right. So this open close on the 1 hour is also the open close on the 30 on the daily candle. All right. So price put back on the 1 hour to this open close. All right. Now let's go to 30 minutes and identify a break of structure. Now from there we can see a break of structure here. So you switch between the line charts to get a clearer picture of a break of structure. So this is a break of structure here. Right? Can you see? It's just as if it is not there. If you without the line chart, you won't likely see it. So 1 hour, 30 minutes, 50 minutes. I mean, it's more obvious here on the 50 minutes. So what will we do after the break of structure have been formed? Wait for price to pull back towards to this thing to a key level. All right, to a key level. So which key level are we going to pick? You can pick key level from any time frame. All right, you can pick a key level from any. Let's go to the 15 minutes and see something. All right, on the 15 minutes here, you can see that we have one. We have an open close here, which have somehow been mitigated. This open close has been mitigated. All right. We have another. Let me go to 30 minutes. Let me remove this break of structure if you guys can see it. Okay. Now on the 30 minutes, we have this A-shaped key level. A-shaped key level. You can see that price came back to the A-shaped key level. And what price does is price use a key level that has what? That has liquidity. That has a liquidity that is close to it. Alright. So this is like a one candle inducement. Okay, now this is a breakout. This candle now is a break. This candle now broke out of this, disrespected the A-shaped key level that is here. Disrespected it with a momentum. All right, so this is a breakout candle. So the next candle that is formed for the breakout candle is the inducement candle. It can be one candle, it can be multiple candles, but here this is the one candle of inducement. All right, so this is our inducement. All right. So in my subsequent videos, where I'll be making use of breakout candle, inducement candle. So I hope you get to know it now. So this is our breakout candle. So we are entering from this A-shaped key level, A-shaped key level, A-shaped key level. Our stop loss will be below the breakout candle. Are you seeing where the breakout candle has come in? The 10. Okay. So I'll be making use of what's breakout candle and the rest. I'll be explaining more as we will go deep into key levels. All right. So I'll be targeting this high, this marginal liquidity. That's where price started to reverse. Or I'll do my regular 4RR. Right? I'll do my normal 4RR. So that's what I do for RR. Now, as price is going, you can be observing price and do what I'm taking more interest. All right. So let's go back to in more high time frame and see if we get another entry. So beautiful. So as price hit our TP, price came back to key level, came back to an open close again. So price came back to this 4 hours open close and tap from it. So we are not you cannot just enter. You cannot just enter because you saw that price there. One thing about key level is that key level they hold price, yes, and there are levels or there are levels in price where you get reactions. Okay, you get reactions. But the one that we hold, it can react and keep going, it can react and reverse, you understand? But the one that will hold will be the one that has liquidity. Okay. But the one that will hold more is the one that you take on confirmations. All right. So this is just like I do say, this is like more of a our first entry. But we won't take this. We won't take this. So we wait for confirmation. And our confirmation will be what after a break of structure. So this price tap to the skill level on the 1 hour, you go to 30 minutes and then what wait for a break of structure. All right. Now we can see break of structure here. You can on if you're using 1 hour, you're using one if price pulls back on the key level on the 1 hour, you can also use 30 minutes and 50 minutes. These two time frame. All right. So let's go to 50 minutes to see. But I'm already seeing a break of structure on the 30 minutes, but is not that clear. If you look at the line chart, you can see all these breaks. Okay, all this one and this one that is below it. There are structures that got broken. But let's go to 15 minutes. All right, you can see that it's even broke structure here and here also. Wow, like three break of structure. Okay, these are first break of structure. All right, so we have now established a break of structure. So we wait for a price to pull back. So a key level. So which key level are we taking from here? Now on the 30 minutes, we can also use any time frame, just like I said. But on the 30 minutes, we are going to use our 30 minutes to pick our break of structure. Our POI, our key level. Sorry for that. So we have this open close here, open close, and this open close. Then we play price from here. This is where we enter. But this one here is our first entry. This is supposed to be our first entry. But we don't take we take on confirmation. Okay, trade on confirmation. So this is our entry from this key level. From this key level, then our stop loss below this candle. So we target where price started to reverse. So these are drawn liquidity, or I'll do my 4RR. I'll do for my 4RR. All right. So you can see what's happened here. Beautiful, right? Beautiful. So once you understand price, you can see that USD gave like four entries, but because we're taking our trade on confirmation, that's why we got two entries, right? Two solid entries. Now using the same thing, I also caught a trade on I caught trade on AUD, USD, AUD card, and also GBP USD. So I'll quickly go to GBP USD because that one has hit TP. AUD USD is still running. So let me go to GBP USD this morning. Okay. Now I'll delete this and I'll delete this, all of it. All right. So somehow GBP, I missed an entry on GBP USD because I was trying to use an extreme key level. Okay. I was trying to use an extreme key level, so I missed. I missed it. Yeah, I missed it. So now this key level, there's, I saw as there was something price was doing. Now this is somehow critical. Well, I just have to explain it to you guys. Okay. Now, but it's simple though. When you get to understand. Now, price is kind of doing a CRT here. Yeah, you know what is CRT, right? I explained that on my previous video. Check my last two previous video. Now, one thing I've got to know about CRT is that CRT, what it does is it shows direction and momentum. Understand? It shows where price is going. Like this low now that was taken, you see that price will go for the high. So that's just what CRT means. When a candle low is taken, then price attacks the high. Okay, that means it shows what direction, and again, it shows momentum in the sense that um uh, if a low is taken and price is going for the high, then the momentum will now kick in. Okay, you can see that what after this candle that took this low was has closed, momentum did what kicked in because the direction has been established, and this low that's taken out means that liquidity has been grabbed. Once the liquidity has been grabbed, that means price now have the liquidity was to move. Okay, it has now taken the liquidity that it wanted to move. All right, so I saw price playing from this key level here on the 4 hours, and also this CRT. So that is combining CRT and what? Combining CRT and key levels. Yeah, that's it. All right. So now I now went to lower time frame to speculate price to see what's happening. Okay, let me delete the CRT candles that I marked. Okay. Now, so I was like waiting for a break of structure. So I now went to 30 minutes. I saw that there's an open close here. And there's this 4 hours open close also that I marked. So since we have for 30 minutes or 30 minutes open close that is going, then I now went to 15 minutes and looked for what a break of structure. Okay, then we had a break of structure here. Then we had a break of structure there. Now we now look inside to see a key level that we would like to play price from. Now I have this let me go to 30 minutes if it's there. Alright. Hold on guys. I think my network. Alright. It's back. Hang on guys. Hang on. Load. Yeah, okay. Now on the 15 minutes, I have this POI, a partial model. I explained partial model. This is a partial model. The partial model. Okay. Then I now have this open close. And I have this open close. All right. So I was buying from this open close. I was waiting for price to come to this open close. So I should have taken the entry from this first model. Okay. But I was like, okay, let me buy from this open close. My stop loss below this candle, and I was in my 4 hour and and price didn't trigger. So this it took from this first model entry. Took from this first model entry and pumped up, man. So I missed the bump. I missed the bump. I missed it. All right, so let me quickly explain partial model if you guys don't know, and for better understanding, I recommend you watch my last video. Now, partial model is let's say for a buy. All right, you have this here and this here. You have this low and this lower low. Then price breaks this structure here. Okay. Now, partial model will wait for price to tap into this exact level and start going up because there's a break of structure, a change of character. Okay, so wash module entry type is this for price to come back to that level and buy. And that's what happened on the line chart. You can see on the week is one that pulled back. All right, the week pulled back to that exact level, and you see that. So that's model entry. So you either I take my entry, some of my entries from model key levels. Then when you come to key level, that's where you now take open close, A shape, V shape key level. So that'll be all for this video. Thank you, thank you. Keep showing up, keep showing up, keep showing up. Yeah, that's just the game. Just have to keep showing up and being consistent with this craft. All right, it can only get better. Bye for now. See you in the next.